is there anything that can be done to say that AUM will double in 1 year?
When I made this number, this slide which is up, I'm using it continuously. You say presented in 2017. It's not the number, I didn't update it. I didn't want to update it for one simple reason. In 2017, we projected the industry will be about 17 lakh crores. Whereas the actual number came out 20 lakh crores. It's better to underestimate and overachieve the numbers. Which was the money manager also, we promise less and we give more except the last 6 months period. So if I go with that principle, I think the number what I think your aspiration is right. Maybe I'm underestimating.
So you are saying that's part of the DNA to be conservative.
That's right.
A lot of this, when we talk about mutual funds, the mindset is equity. Okay, so we talk about AUMs growing, we talk about equity. So to my mind, largely is because the retail investors do not invest much in debt. The retail investors understand mutual funds as equity mutual funds, they don't understand it as debt. So what do you think, this question, I'll put it across to, I'll put it across to Aman. What do you think the industry should be doing so that the retail investors also get into debt products?
So I think you're right. A basic premise that mutual funds typically are still associated somewhat with equity was true till about, I would say, a decade ago. Since then, you've seen a fairly large interest and inflows coming in from retail investors in the fixed income products as well. I think the industry has clearly done a lot in trying to communicate both to retail investors. The initial thrust clearly was more on institutional investors who brought in large amount of money into the fixed income products. But I think industry on its own has now created a wide suite of products suiting all sorts of maturity and risk requirements for investors. Of late, I think you must have noticed that we've also been communicating a lot through media, trying to clearly amplify the better opportunities and also availability of very sound products within the mutual fund product suite. And I think that is what is bringing in a fairly large number of retail investors coming in into the mutual funds. The basic problem, I guess, still remains around relatively higher level of risk-free returns, which is essentially where deposit rates are benchmarked. And I think that creates some degree of hesitance when a retail investor looks at a mutual fund product, because we can't assure or indicate any returns, right? Clearly, we are driven by the performance and the returns that we can generate out of the underlying portfolio. What you would notice now, I think, is clearly that with the last decade of presence and performance across different credit cycles or interest rate cycles, I think the industry has now amply demonstrated that this is a superior product to manage varying economic and interest rate scenarios. And I think a point to actually highlight how mutual funds have become more ingrained into a typical retail investor's portfolio is the data that Bala had shown. The penetration of mutual funds as a percentage of fixed deposits. Clearly, there is money shifting away from the traditional deposits or fixed rate bonds. In our view, if you really look at the broader development and growth in the Indian economy, capital markets have to grow. The prime driver of any economic growth will be capital markets, and we are providers of one of the largest source of pool of assets there, and funds there. So just look back at what's really been happening when you look at a typical investor's psyche when he looks to invest in products. Firstly, he is now looking at convenience. I think clearly mutual funds are offering you convenience. They're offering you diversification. The traditional benefits that a mutual fund offers you is available to retail investors. The reach is definitely a lot more today. You have actually a well-designed, I would say, process of portfolio creation through financial planning. So I think if your financial advisor is just telling you to invest in one asset class, and if it's only equity, you need to be careful about that. I think that's clearly a much better awareness and education that's been brought about by financial planners to most households, is also making them now look at diversification away from just equity. So I think it's very clear that we will see a continued thrust and increase as far as fixed income allocation for broader households are concerned. And we are seeing that if you look at the kind of products which are being sold across the entire length and breadth of the country. So we're quite optimistic, given the kind of initiatives that we have undertaken, the level of education which now is prevailing among both the intermediaries as well as end investors. And of course, clearly, Bala has been doing a good job of advertising mutual Fund Sahi Hai, because that's really the core, I would say, message that we need to send out to retail investors.
The morning we spent a lot of time talking about technology, where we talked about the payment banks, the small finance banks, which really has integrated very, very well with technology and taken banking products, which is lending, the lending side of it, really to the grassroots. Okay, so where do we see that? Can I put this question to you, Lakshmi? Where do we see that as far as the mutual fund industry is concerned? How are we integrating technology to expand the reach?
So I think technology or digital, or they're used quite interrelated or commingled. I think it's something which has been the discussion of every boardroom, whether it is an asset management as a manufacturer, whether it is an investor, or whether it is a channel partner. And when we did one such discussion in our boardroom, our bank vice chairman, Mr. Kotak, made a statement that when we were discussing digital hoga, nahi hoga, technology hoga, nahi hoga, and he made a statement saying that technology or digital is like God. And if you believe in God and there is no problem. But if you don't believe in God and there is God, you have serious trouble. So I think that is basically the future of technology as far as even mutual fund is concerned. As we speak today, 55 to 60% of mutual fund transactions are already on digital platform, aided either combination of direct stroke intermediary driven. So basically, I think going forward as a mutual fund industry, it is inevitable that you have to imbibe technology. Very often we heard this question yesterday. There was one of the forums where again similar discussion happened, where should technology be seen or should digital or the technology boom, should that be seen as the potential threat for the mutual fund industry? And again yesterday there was this question whether the influx of maybe a Paytm, etc., is that the geo moment for the mutual fund industry? And I think when we look apart and we stand aside and we debate this, it's very, very evident that you cannot look at any of these things as, I would say, competitors. These are more complementers, these are more enablers to do our business better. Whether it is, as I said, as a manufacturer, we will look forward to make life better, to give the investor a positive experience, to give the channel partner or the advisor a positive experience. So I think it is inevitable that we think about technology in the right spirit. For those of us or for the others who believe that jab aayega tab dekh lenge, I think it is time for us to get up and say, as Bala rightly observed, that in his projections he had seen that the mutual fund industry will be at 17 lakh crore, which the number actually turned out to be 20 lakh crore. That conservative estimate outlived and you saw a better number. But in terms of technology, I think it is time not to be conservative but aggressive. So you have to leapfrog and think, what could be the next big thing? So we had our investment offsite last week, and where we had one of the speakers come and speak with us. I shared the name with you, it was Manish. And the presentation that he made on technology being a potential disruptor, mind you, in any field, it was unbelievable. I mean, you can't even think of what things can happen going forward. So I think it is very, very important as various stakeholders sitting in this room, as an investor, advisor, individual, manufacturer, doesn't matter. It is time that we think that technology is God. And by God, I'm not saying go to temple every day, but don't be an atheist and say that I'm not going to go.
I think maybe a year or so, there's been a lot of talk about SIPs, and everybody's got a number that, the monthly SIP number is 7,000 crores, 8,000 crores. I don't know what the latest number is. Okay, so there's a lot of work which has happened here. That's given a lot of confidence to some of the investors that, the dependency on FIIs is not so much as it was earlier. Okay, as an equity investor, I would be worried that, if FIIs start withdrawing money, what happens? Should I also start selling? So what's your take on that, Manish? What is the dependence on FII investors? What is our own Indian equity, where are we poised?
The entire paradigms we've thought through things is, or any emerging market if you see, typically you sell emerging markets when the currency is expensive and you buy them when the currency is cheap. But India has now reached a new nirvana where whether the rupee is expensive or rupee is cheap, the market seems to be stable and positive.
So which has meant a lot of realignment for each of the AMCs. They have to do a lot of realignment or rejig of the schemes. So how has that impacted, or how is that going to benefit investors? We would like to hear your take on that.
I think, at least on the debt side, I think there hasn't been too much of a rejig. Yes, there has been some rejig that has happened. I think the industry was running most of the products in the categories that have been defined now. It was just that the names were different. So all of them were having those categories, but the names were originally, when they were probably envisaged, the names were different, but their strategies were different. What all SEBI has done is basically brought same name and the strategy to be mapped together. So I don't think so too much has changed as far as the fixed income is concerned. Even equity, I mean, I'm not too sure about those changes, but fixed income definitely there hasn't been much change. What this brings to for the investors is that now that the name and the label is the same and the strategy is well defined, investors can now actually, even retail investors which you were trying to focus on earlier, can now associate the name and understand the strategy a bit better. Earlier you had a name which was different and strategy was slightly different. Now being the same, I think it becomes easier for investors to invest. So I think it actually will help over a longer run to get more money, and investors will understand the strategies underlying. So I think it's a beneficial thing from the investors' point.